Ladies and gentlemen, welcome to Only Trade to Win. Today is Thursday, December the 21st, 6 a.m. New York time. Right now we are looking at the picture of the Dow Jones Industrial Average Index. This is the index that we've been closely following from the November 1st bottom, and when it gapped up into the second resistance area, we said that the all-time high is really close, and once the index gets there, if it closes above, there will be no resistance and it will just run away looking for a liquidity area, only we did not know where that liquidity area was until yesterday. So yesterday, December the 20th, we got the first red bar in the Dow Jones Industrial Index, and we can say that it's the biggest one for the whole run-up of 5,000 points. So yesterday the index gave back 475 points, and we can say that the average found its liquidity area. So from now on we just wait and see what happens, but it was quite impressive to see the Dow Jones Industrial Average set up a bear trap on October 30th and then reverse the following day and just run for 49 days, up 15% from the bottom, or 5,000 points. And again, if you look at number one down at the bottom, that's beginning of November, and number two is yesterday. The index ran up without any significant pullbacks. Yesterday was the first day, so here we just wait and see. Will it consolidate and move up higher? Will it pull back? The only way to find out is to give it some time. So let's take a quick look on our spreadsheet. So we marked up, last time we marked up that Nasdaq made all-time highs and the Dow made all-time highs. Let's go back to our pictures and look at Nasdaq real quick. This is again the Dow, and here is the Nasdaq. The reason I wanted you to see the Dow before we switched is because even though Nasdaq also made its all-time high, it did not get above it like the Dow did. So one more time, here is the picture of the Dow, and it exceeded its previous all-time high by more than 3%. And here is the picture of Nasdaq, which traded just 1% above its all-time high. Now here we are looking at the picture of Nasdaq on weekly. I wanted to go back and show you something interesting. Here you can see the rise of Nasdaq from 2018 into that all-time high, or previous all-time high it set in 2021. You can clearly see the uptrend. In that whole rise from 2018 to 2021, we can see that there were only two pullbacks, and both lasted very short period of time. Before, the first one in October of 2018, where Nasdaq pulled back 21%, and the second one was during the pandemic, where it dropped off by 27%, and it started rallying again within 1 month, making its all-time high right here in November of 2021. Now we're back at the all-time highs again. So if we go to this point where the sell-off began, we can see that this one was more significant than the previous two, and also it was longer. The Nasdaq gave back 35% of its value and spent 1 year pulling back from its all-time highs. And if you look at the blue line, this is where the index started 2023 and pretty much recovered the whole move down it experienced in the previous year. And actually, after a move like that, we're sitting in a pretty dangerous zone. This is exactly the spot from which it sold off 2 years ago. Of course, the fundamental reason for it selling off 2 years ago was Russia invading Ukraine and starting a full-scale war. And today we already know that Ukraine and Israel are at war. And I think the market has decided that there is no real threat to it because it's back to its all-time high territory. So the fear is gone. Now we have to wait and see at the next move. And one of the things that we're expecting is that our indexes and stocks are jumping back on their mega trend. And for that, we need to zoom out and we need to take a look at a much bigger picture. And basically, the bigger picture tells us that our mega trend, our biggest trend, has been up for a long period of time. And on that big picture, the last sell-off was a significant one. Yet the markets have recovered everything they've lost, regardless of all the bad news, regardless of all the wars that are going on in the world, regardless of the fact that the interest rates in the United States are at their 20-year high, regardless of the fact that the United States has the largest national debt, which exceeded $33 trillion. Regardless of all that, the Dow and the Nasdaq made its all-time high. And it basically tells us that we need to get ready. And if this trend continues, that regardless of what you will hear on TV or read in the news, you have to watch and see what the prices are doing. And again, the prices on the Dow and the Nasdaq are reaching in its all-time high territory. And if we remove all the subjective stuff, we can say that this is the best environment that it ever had because it reached the highest numbers. Of course, we never know what the market will do in the future, but we know what it's done so far in the past 10, 15, 20 years. And we also saw the last 2 years, which were very difficult, yet we are back to where we were before Russia invaded Ukraine, before Israel started eliminating Hamas for the attacks on October 7th. We have have all the bad news in the market, and the market made its all-time high. So let's take a look at the S&P 500 and Russell. The S&P 500 failed to test its all-time highs. It came very close, so we're going to see if it's going to pull back and try to test that area again. We still have a few days left in this year, and marking up can do magic at the end of the year. So don't write S&P 500 off yet. Let's wait a few days and see if you can test that purple area and do the same thing as the Dow did. Trade above it, close above it, and then run away, try to find liquidity. The main thing we're looking for is if it's not going to pull back very far, and then try to test its all-time highs again and hopefully succeed this time. And our last stop is our sick man Russell, who was so far behind every other index, yet it did not fail to impress with its move up. So again, that was our bottom of November 1st. The first retracement after move up for Russell was a violent one because everyone knew it was a weak index. Then we push up right below the beginning of the year. The blue line represents the starting value of the index on January 2023. So the second time after we move up and make this high, it does not sell off like the first time. So the buyers are becoming more aggressive, or sellers are becoming less aggressive. Then Russell succeeds with moving above the opening for the year. With a minor pullback, it runs up and is up 23% from its bottom made on November 1st. So the sick man had a pretty nice move, yet if we look at its picture weekly, it has long ways to go to its all-time high, and it's also is sitting below its 52-week high. So Russell is our sick man. Even though it's positive for the year, it failed to make its 52-week highs, and it's sitting way below its all-time high that it set in November of 2021. And here you have it, ladies and gentlemen. Our strongest index is the Dow, followed by the Nasdaq, followed by the S&P 500, and closing the pack is our sick man Russell. So for all the indexes, after a big move up, we're looking for a consolidation and see if they can push into their all-time highs and continue the Santa Claus rally until the end of the year and maybe into 2024. Last thing I leave you with is that remember that anything is possible in the markets. We can be making all-time highs today, then we can reverse tomorrow and then test our 52-week lows. I hope it's not the case, because it's been really exciting to see those powerful moves all across the board. Ladies and gentlemen, thank you for your time. Navigate with care, and we'll see you next time. Have a great day, everybody.